The Philippines insurance industry is poised for growth, driven by a rising middle class and higher disposable incomes. Here to discuss this is Raoul Littaua from Insular Life. Raoul, can you please discuss the trends you have noticed lately in the Philippines insurance industry?
Last year, the life insurance industry in the Philippines, in terms of total premiums, was rather flat, although new business premiums grew by 10%. We're seeing a significant change this year. Total premiums is up, if I'm not mistaken, 12% so far. And the growth is really in traditional products. So we've noticed a swing from the sale of VUL, or variable unit linked products, which was very strong in previous years. It has swung to traditional products, more for guaranteed benefits and the protection proposition of life insurance. I guess part of the reason is the lackluster performance of the local stock market in the last 5 years or so. So that could account for it as well.
What trends are emerging in the Philippines life insurance industry as the year comes to an end?
It will still, I think, in terms of trends, in terms of demand, the demand for traditional products, the traditional protection proposition of life insurance will continue. Coming out of the pandemic, if you look at life insurance and its traditional proposition as protection for the three risks, the risk of dying too soon, the risk of catastrophic illness, and the risk of living too long. Coming out of the pandemic, during the pandemic, it was the risk of dying too soon, of premature death, given COVID and so on. But now we're seeing the shift, for protection for catastrophic illness and the risks of living too long. You see, the Philippines has a very young population. In a couple of years, maybe 2/3 of our population will be made up of millennials and Gen Zs. Now, a female born in Singapore today can expect to live all the way up to 100. So these are the concerns. It's more the living benefits of life insurance, or bringing life to life insurance. That is a main consideration of the market of the future.
So, Raoul, how is InLife performing this year?
In terms of the Philippine life insurance market, the main concern really is under-penetration. We have not spread as effectively, or maybe even as efficiently as we should, the benefits of life insurance to the greater population. As a percentage of GDP, life insurance penetration in the Philippines is below 1.7. I think it's 1.6%, which really lags in comparison to other countries and other areas. And if you look at the population in general, the protection gap in the Philippines is, I think, about 1 million per household. So there's a big opportunity, and really it's the distribution. It's access to life insurance. That's why in the case of InLife, we've been growing and expanding our distribution reach. We have three main lines of distribution: agency distribution. And for the Philippines, I think that is the main distribution channel. We're growing very well there, double-digit growth in agency. The other strong distribution channel is bank assurance, and our main bank partner is Union Bank of the Philippines. That has also a compounded growth rate of, I think, 29%, and it's doing very well. And the third distribution channel, which I think is most effective in terms of reach and then penetration, is group insurance. So our employee benefits corporate solutions business is doing very well, growing at 65% so far this year. And we intend to maintain that momentum in terms of our distribution reach.
Thank you very much for your time today, Raoul.
Thank you for having me.
Once again, that was Raoul Littaua, President and Chief Executive Officer of Insular Life. Raoul will be speaking at the Insurance Asia Forum on October the 1st. For more news and a chance to network with industry leaders at the Insurance Asia Forum, please sign up at insuranceasia.com.